Good afternoon. My name is Ed Harkins, and I'm a managing director at GKB Ventures. And as you just heard from Gabby, we're an export finance advisory firm working on a whole series of projects mainly across Africa. And this afternoon, we've got a great session following on from the last one, hopefully with a case study of what we think is good debt and a good benchmark for Africa. And I'm delighted to say I'm joined by two distinguished guests who I'll ask to introduce themselves, starting with Nick.
Good morning, everybody. Or good afternoon.
Afternoon.
Good grief, yes. How time flies when you're enjoying yourself. Good afternoon, my name's Nicholas Oliver. So I head up business development for NMS Infrastructure. We build things on the continent, mostly healthcare, a little bit of agriculture. And we use the export credit agencies to a great extent. I'm also the co-chair of the Africa Infrastructure Board, working with DIT, looking at how we can improve our interaction both ways, from UK to the continent and the continent to UK.
Great, thanks, Nick. And Simon? Is that working? Perhaps.
Hello?
Oh, this one? No? Can we,
Is that better? There we go.
That's working.
Hi everyone, my name's Simon Bunckenburg and I'm a business manager at UK Export Finance in the infrastructure and construction team. So we look at projects in those sectors worldwide, although I think 80% of our activity is in Africa.
Thanks, Simon. So, as I said this afternoon, we've got hopefully what we think is an example of what a good debt project looks like. And I've got a few slides now that I'll briefly run through just to give you an overview of the project. And then I think we'll get into a discussion about what we all felt was good about the project. Very much like this to be an interactive session, so if anyone's got a question, do let us know. We can have some questions at the end, but if there's questions as we go along, then please feel free to jump in. So, what does good debt look like? Well, for us at GKB, we think good debt looks like a debt that's associated with a high-quality social infrastructure project or project with strong economic growth. And as Portia was saying a little earlier, health is wealth, and we think that really applies to this project. What else do you need? Long-term, low-cost financing to hit all the buttons around affordability. Fixed rate, again, capping the cost of funding, really important for African sovereigns. Where it's funded in a very transparent manner. And we think this project is a great example of that, and it's the Côte d'Ivoire NMS hospital financing, which was backed by Simon and his team at UK Export Finance, where GKB acted as the advisor, and there's also a number of, I think, the banks in the transaction in the room and at the conference. And high level, we were able to get 13-year money for our client, the Ministry of Finance. 13-year money at a fixed rate, thanks to Simon and his team of 0.32%, thanks to direct lending, which we believe was the lowest cost, longest term Euro financing done to date in Africa. So again, briefly, so as I said, we're advisor on the project, sole advisor, advised on the funding strategy for both the export credit and the commercial loan. The commercial loan we're able to do as a separate financing to get the project underway. We ran a tender process for that, which we did, and MUFG was appointed as the lead arranger for that. Down at the bottom of my slide, I've got some of the challenges that we had to deal with and overcome. I think the most important one of those was the fact that the bank was appointed quite literally 2 or 3 weeks before COVID hit us and unleashed really extreme volatility in terms of the funding markets. But we were able to deal with all those issues and get the financing closed in a timely manner for the Republic. But what that also did is it created this tension, if you like, between the backdrop of we've got a massive global pandemic and health has suddenly gone from being very important to top of the list, against a tension between trying to get the project done at any cost. So we're able to sort of navigate through that process and get the project done at an affordable price for the Ministry of Finance. And again, just to add to some of the challenges, we also had quite a lot of political change. So we went through two, I think, prime ministers along the way, and often at times where we actually needed the prime minister to sign things off, and they tragically passed away. So it led to more delays on the project. But I'm glad to say all those were overcome. And I said, as we ran the tender process for the project, we were able to secure 100% financing for the whole project, and with a separate standalone commercial loan in a period of extreme volatility. We were able to increase the level of direct lending, which we'll come on to, I think, in a minute, which was really important, from up to 50%. So there's a 50% loan. As I said, there's a large project value of 326 million euro. The 100% direct lending, we were able to backdate, so it's longer tenor within the financing, which was able to lower the cost of the buyer credit within the UKEF piece, again, bringing the cost down, enhancing affordability. We think it's the lowest ever direct lending rate in Africa, and enhanced affordability with a low all-in cost for our client. And here's some feedback from John Markbrew, who's the economic advisor to the Prime Minister of Ivory Coast. With the support of UKEF and GKB, we're able to put into place a fully transparent, timely, cost-effective and affordable financing solution that will make this important project a success. The ability of UKEF to provide direct loans was key to securing this deal. So interesting comment there. And it's not just the financing that's an important element of this. It's obviously a project that, with the backdrop of a pandemic, will provide healthcare to, I think it's 2 million Ivorians who didn't have access to good healthcare. So really good, we think, well-structured project with good debt, but also a fantastic project to be involved in. And Nick, if I could come on to you in terms of your thoughts, what was good around the project. I can see the Ivorians felt that direct lending was an important element in terms of the success and affordability. Is that?
Yes, I mean, absolutely. It was key. This was a hard-fought project. It was into a francophone country that was not normally open to UK companies. I think it's fair to say that the French did everything they could possibly do to unseat us and to unseat UKEF from this project. So the key, I think one of the really big key things, and this is now we're seeing being rolled out around Africa. If we looked at how these projects were looked at, say, 10 years ago, they'd look at the commercial loan and its affordability, its value for money. And they would look at the finance loan and its affordability and value for money as completely separate items. And now they're looking at it all as one. So whereas we might have been on level playing field with a French competitor in the cost of the build, because of the direct lending, and yes, as you say, we got 50% direct lending on this, which I'm sure Simon won't be surprised to hear me say was a disappointment, seeing as he gave us 100% for Zambia. But that direct lending piece made the loan so attractive that it swung the whole project in our direction.
Yeah, I mean, we thought it was a really important part, and it being health, it's not always, I think, as Portia was touching on before, the easiest to find the funding for, but certainly even against the backdrop of COVID, it made it just quite a lot harder. So that big tranche of direct lending at that low price, I think, was really, really critical to the success. But I mean, Simon, from your end and UKEF, what do you see as the successful parts of this transaction, and what makes it a good project and good debt?
Thanks, Ed. Thanks, Nick. So I think, from a UKEF perspective, the first thing that we look at, which you haven't actually touched there, Ed, is the UK content. And we know in healthcare, the UK is a really good supply chain, NMS is a good lead EPC, and those things together meant that we had a really high level of UK content in the deal. So that's, a big tick for UK Export Finance. And it's actually one of the things as well that we look at when we're deciding when to allocate UK content. And it's one of the common kind of practices, I guess. It's not a policy, but it's a practice that we apply to match the direct lending to the UK content, and this serves as an incentive to the exporter to find as much UK content as they can, so that they can keep their client or the borrower happy, who is obviously attracted to the direct lending fixed rate. But looking beyond just the UK content, I think for us, healthcare is a really key sector. We see the massive need for it in Africa, so we're always happy to look at projects in that area. And particularly, I think, in this project, the hospitals that we financed were outside the capital, because often we see, even in the UK, a lot of investment is done in the capital city, and the regions are left behind, so to speak. So seeing that this project was going to benefit Ivorians all across the country was really important to see as well.
Yeah, and that, I mean, that's that whole kind of sustainability and narrative and so on. Nick?
Yeah, no, I mean, I was going to pick up on Simon says on the UK content piece. I think this is very important. We have a view that if you're using UK taxpayers' cover or money, we should maximise UK content to its extent. And I think at the moment we're standing at about 48% on this project. A lot of work with GE, healthcare, a lot of that product coming through the UK out of their new works in Cheltenham. Really important, because it also helps, of course, grow that capacity within the UK itself. So I think that is an area that we've got to concentrate on more in order to get that DL. And flippant comments aside, 50% direct lending into a contract like this is a beta into the marketplace. I think another area, if I may.
Sorry, I was going to say my question was going to be how important was the sustainability narrative, both for, I guess, NMS as a company and also for UKEF getting involved and putting support down, potentially lifting the direct lending element. I don't, Simon, want to make a comment on that?
Yeah, thanks, Ed. So I think as a OECD export credit agency, one of the things that we have to look at for all sustainable lending markets is the sustainable lending principles, and that's a process that we go through in the UK with our development colleagues in the Foreign, Commonwealth and Development Office. But basically, there's kind of three things that we look at there: the macro debt picture of the country. The value for money, is the contract a good price? Has it been competitively bid? If not, does it represent value for money? And then third, the economic viability, and what are the positive economic returns? These are all things I think that's echoing what was just said in the earlier conversation. But we go through quite a formal and rigorous process to make sure that projects that we support in sustainable lending countries are sustainable. And this project obviously met that.
And for Nick, NMS, I mean, sustainability, ESG, is that an important?
Yeah, I mean, it's important because we believe in it. It's also important for the funding. We have our. It's so important that we have our own ESG department, which seems to be growing at an exponential rate, headed up by somebody who is extremely senior within that area. We see it as ESG squared. The squared being green. We look very carefully at what we're building, how we're building it. We spend a lot of time on research in order to make the build sustainable, which we believe helps the funding to be sustainable. And we don't stand still. I think on this particular project, we spent a lot of time looking at how we're going to build it. And for Côte d'Ivoire, this was a game changer again, because it's the first time that our construction methodology, using a light steel frame, has been used, and it significantly changes the sustainability of the buildings.
Actually, I mean, interesting. I met one of the banks in the syndicate, Odo. No, I don't know if they're here, but they were saying that sustainability health element was actually a really critical part of their approval process, and would help pull them into the project. So I think, as we heard earlier, it's becoming more and more important. But we only have a brief slot for this project, and there's this topic, and there's a lot to cover. I wanted to get onto the francophone UK element. It's obviously the first UKEF deal into francophone Africa. I think before we did this project, there used to be a bit of a perception that markets like Ivory Coast were almost closed off to Anglophone exporters. What's been your experience, Nick, and how important was the help that Simon provided, and also from the embassy on the ground?
It was a journey. I almost regretted the time that I spent asleep at school not learning French, but it was a journey. It's a very different way of working, and I think that we went on an extremely steep learning curve as we went through it. I think there were two things that really helped us. One was that our ambassador at the time, Josephine Gould, in the embassy, was really first class, helped us a huge amount getting through that maze that is the French procedures, and that helped us hugely. I think the other thing that helped us was the interaction with UKEF. They were very proactive, and with Jean-Marc Brewer, we've heard, he was absolutely clear that the affordability of the loan was going to be critical. And all the way through this process, we kept on coming back to that, hence the long and interesting discussions that we had on the level of direct lending during that process.
And Simon, for you, on the, I think we spoke a couple of weeks ago, you were saying that this project was, I mean, the francophone element was important because actually it was a long project. Actually, we were working on it for almost 5 years, I think. But from your perspective, I think you first had meetings with the government of Ivory Coast in 2020 at the AIS summit in London. But was that francophone element an important factor for you in terms of your support and?
Yeah, so I think for UKEF, we follow our exporters. So we're on cover for most markets around the world, and if our exporter wants to go there, we'll follow them. For Africa, though, I think, and you referred to the Africa Investment Summit, so that was held in January 2020, and we actually had a meeting with the Ivorian Ministry of Finance and the delegation, and they were very clear to us in that meeting that this was the number one priority, and so we started working on it at that point. But the kind of the theme, I think, at that conference was that the UK is here to engage with all of Africa, including parts where we haven't provided as much support or engaged as much previously. And we're actually starting to see the fruits of that now. In the last 2 or 3 years, we've signed deals in many countries in West Africa. Yesterday, I think it was, we actually announced our first deal in Cameroon, a road project, but we've also done deals as well as the Ivory Coast, and Gabon, Benin, and Senegal as well, and are looking at others in the region. So all markets where UK Export Finance and UK companies have not really been involved to a great extent in the previous few years, but we think that going forward we are positioning ourselves as a credible partner, and those relationships are growing, and in all of those markets we're talking about the next deals to come. So we've laid solid foundations, I think.
Okay, cover. Are there any questions from the audience, perhaps? Can't see actually. Gavin.
If you had 100% OECD CER and or concessional finance to support you, how much more business could you do?
Yeah, Gabby, that's exactly what I expected. And I've got 6 points down here where we could take the affordability, premiums. The discussion on premiums with Ivory Coast was deep and long and hard. The term, we heard it before. I just jokingly said to Simon, good news that we can get 18 years now for social. He did reply and say, why only 18? I did record that. The grace period set to construction. Okay, why can't that be set a bit more flexibility on that? Flexibility on repayments. Countries on the continent, they do have their ups and downs. If they're late by a day on flexibility on their repayments, they go into default. It's not quite a day, but you know what I mean. They go into default. Why can't that be a little bit more flexible? Some months they have more than they have next month. And then, of course, the two normal ones, the concessional lending and the more direct lending. Okay. Yes, I think that as we go through, and we've got further work coming out in Côte d'Ivoire, we've managed to keep this project on time and on budget. We've got more work coming. If you can add concessional lending, direct lending, more direct lending, we are going to find that our competitors fall behind us. So yeah, I mean, I think it's frankly a no-brainer. The pit of requirements is bottomless. What isn't bottomless is the funding for those requirements.
Any other questions? I mean, I was going to say, how can we make it a little better? But I mean, it's a good project, great project, and the funding's great. But I think, as you say, more flexibility and so on. And Simon, I mean, any thoughts from you if you could break free a little bit from the OECD and you had some asks from them in terms of what they can do to make projects like this one just that little bit more affordable from an African government's perspective, what would you suggest that they do?
Yeah, I think the key thing that I see for the OECD is tenor. I think that's something that can make a real difference, and I kind of agreed with a lot of the discussion in the previous panel about that. I think there's been some discussion today already about the 95% temporary change. Hopefully that becomes permanent. I think that's another way that ECA financing can make the total cost of financing cheaper if we're covering more of it. So I see that as a positive thing. Direct lending, we recognise the benefit. UKEF is convincing the Treasury to release more, and that's something we try to do, I think, every 6 months with very success. But we'll try so that we can have more available. The grace period, I'm not so sure I agree on that. At some point you have to start repaying. It seems to me when you're getting the benefit of the project, it's a good time to start. So I agree with some of your ideas, Nick, but not all.
But
yeah, quite right and proper. We've got to have an argument somewhere.
But a longer tenor for either defence or water, but not for health, that's just, I don't think it makes sense. I just think there needs to be more flexibility, lower premiums. We need to be encouraging countries to do more sustainable social projects, just like this one. And I think we need to be encouraging banks to be doing it as well, perhaps lower risk ratings for these sorts of projects and so on and so forth.
Yeah, just on that point, one thing that we've heard in relation to direct lending is what's really important is the fixed rate, so that the borrower has fixed over the cost of funds. And we at UKEF have developed a product, a buyer credit guarantee. We've enhanced it so that we can cover fixed rate lending by the banks because we thought that was a gap in the market. And I think that was 1 or 2 years ago now. And we're yet to see a bank come to us with that structure. So we're yet to see banks rise to that challenge. We have tools available to meet the needs of our borrowers, but we do need the banks to step up there as well. It's not all on the ECAs, I think.
Okay. Well, I think we were supposed to be overrun, I think, a little bit on my watch. If there's no more questions, I don't think there are, just like to thank all the panellists and all the people for listening, and also thanks to GTR for letting us all come back here in person again after a long break, and we hope to be back soon talking about some other good deals that we've been doing. So thanks, everyone.
Thank you.